This interview is for information only and should not be considered as investment advice or a recommendation to buy shares in the company featured. Welcome to this Stock Box interview. Well, welcome back to the Research Talks here from Stockbox with Alan Green. So, Alan, how have you been? Of course, last time we spoke, you told me you were wearing a woolly jumper. Now, a cardigan, actually. I think you'd put on a cardigan for the first time, but you had resisted the heating. So, how's this week been?
Well, I resisted the heating up until Wednesday evening when it suddenly got very cold indeed. And I mean, frankly, I would have sat there and resisted, but we were sitting on the sofa. Yeah, sitting on the sofa watching one of these Netflix series, and Annie said to me, "No," she said, "I'm going to get a blanket and put it on my knees." I say, "Oh, go and turn the heating on then." So we had the heating on for a couple of hours. Last night, I walked out in the back garden at about 7 in the evening, and it was about 5 degrees centigrade or less. So I thought, no, we'll have the heating on again today. So yeah.
Okay, well, fair enough. So September, yeah. When I lived in the UK, I would always try and wait until October.
I know. It was always March and October. That was historically. Yep, heating goes on in October, not before.
Yeah, you can't put it on before. It's a good cost-saving thing, but sometimes you have to give in. But I haven't done it yet here. But I have a very sunny apartment, so as long as we've still got some sun shining, if it's cold outside, it's still okay. So we'll see. I'll let you know when mine goes on there. But for sure, in the Netherlands, it turned chilly yesterday as well. Definitely a massive shift in the climate. So yeah, there we go. We have to get our heads down, get back to work, get back to business. Let's see what Q4 brings. So 3 companies today. Cook's Coffee, we're going to start with something a little bit different, but a company that, it's kind of interesting. We've interviewed them a couple of times on Stockbox. I'm very keen to follow that story and see how it develops. I do like my coffee. I know you do as well, Alan. So something a little bit different. Then we'll go to Corcel PLC, who are doing sort of a change in strategy, and then we've got Katoro Gold as well, who have been very, very quiet for a long time, but again, looking like with a change of management there, a bit of a change of focus with that uranium acquisition, that it's worth kind of just reminding about Katoro and perhaps where they might be heading down this new route. But Cook's Coffee, first of all, Alan, I know you've done your research, so give us your take on Cook's Coffee Company.
Yes, Cook's Coffee are a company. They're listed, of course, here on Aquis and also on the New Zealand Stock Exchange. The NZX is EPIC code CCC, and here, of course, it's Cook, COOK. But coffee, of course, is a well-trodden path in terms of business models, and of course, the best exponents of that are, of course, Costa Coffee and Starbucks, which are well known. But there are so many other ethical brands that are also generating great business too, and Cook's Coffee is certainly one of those. And they've had a strong evolution, if you like. The company was founded in 1993 in Canada, and really well established and growing rapidly now in the UK. It's now the 6th largest coffee chain in the UK, and is also the largest solely franchised or franchiser-focused coffee chain in both the UK and Ireland. So at present, the company has 104 outlets worldwide. They are up to 83 group sites in the UK and Ireland now. That's up from 75 in April this year, and there are also a further 10 outlets lined up to come on stream, as it were. And of course, the company is ably managed by Chief Executive Aidan Keegan, who I know you've interviewed, Mark, and Aidan is should I call him an industry veteran? I think when you get to 25 years experience in the food and beverage industry, you can say you're an industry veteran, but he's certainly, his skills very much are in the franchise or the area of operating franchises and working with suppliers. Also very strong on the operational side too. But Aidan's really developed the business. I mean, he's really been there, sort of been certainly pioneering the drive in the UK. He's been with the company for more than 20 years. Originally operations manager in Ireland before taking up the role of MD for the Esquires and Cook coffee business in the UK in 2018. He was promoted to CEO early this year, but effectively he's been doing that job really since 2018. So Cook's Coffee is the owner of the Esquires coffee brand, and Esquires represents ethical coffee with a community spirit, and it has a strong following. Obviously, I've mentioned the number of outlets. There are a total of 104 outlets worldwide, but also the group has a very strong online presence too, and it's very much promoting the click and collect model, and also, of course, benefits there for being a member with the company also. But ethical coffee is certainly a very strong area in this particular arena at present. The company's certainly had a fairly sort of indifferent time, if we say, over the past year in regard to the market performance. Currently has a market capitalization of just 4.1 million, but it's off the year low. Shares are traded as high as 17p on the current year, as low as 5.5p, and here we are at 6.5p today. So we're off that low, and really that's on the back of a very strong trading update that was issued just 3 days ago, where the company announced really strong progress. Group store sales up 23% to 13.8 million. Even stronger growth in the UK, 32.5% growth in the UK, up to 9.5 million. And Ireland also up to 6.5% growth there to 4.3 million. As I say, I mentioned that the group now has 83 group sites in the UK, but this pipeline is being added to a further 10 outlets and those will be up and running before the financial year end. So we'll see some impact of those additional sites on the revenues for the year. And the group are, as I've already mentioned, working on that digital platform and working on developing it and growing the business online, engaging with users, engendering user brand loyalty, which is key nowadays. But I think at this juncture, this looks like a really nice investment, and I think I think in terms of stability, you've got a bit of a cash cow of a business here, that's generating solid cash. It's investing that cash into these new outlets and new branches, and of course, ethical is the way forward now. Ethically sourced coffee is the way forward, and I think if the group continues to grow at this rate and it's able to add branches on at this rate, then it could well attract the attention of some of the bigger players in the market. And of course, if one of the big boys in the market is looking to really develop its ethical focus, then of course an existing brand that's successful, that's growing cash, could very much be in the frame for that company. But either way, I think there are lots of reasons to buy this company. Firstly, on the cash growth, the EBITDA growth also as well, and also I think as a potential takeout target for some of the bigger players in the sector.
Good. Well, thank you, Alan. Yes, as I say, I have enjoyed meeting Aidan and talking about the business model there. And I think one of the things in the first interview that he did with us, he said that each store in the UK, every new store that they open, effectively contributes 20,000 to the bottom line of Cooks. And in Ireland, just the way the business model works there a little bit differently. It's actually 60,000 euros, and their plan is really, their goal is to open around 20 new stores every year, and they're on track to doing it this year. So as I say, it's nice to get to know them, nice to sort of have a bit of a different investment proposition out there. As we all know, that model's worked quite well, and coffee and coffee shops is a favourite of pretty much everyone, isn't it? To go for a little coffee, and everything's made fresh on the day, apparently, as well. That's part of it.
Yep.
And yeah, if you want to start a coffee shop as an individual, or you're a bit of an entrepreneur and you want to manage a region, then that's what cooks are going after, really. So yeah, it's early days getting to know them. But I certainly like what I'm hearing from Aidan so far. I think the business model is very simple, very easy to understand. They've got their targets there. Potentially a company there just to, almost put some money away and not like the miners. You can almost, say, okay, well, I'm going to just let this mind its own business for a bit, and not be so worried about spikes, ups and downs, and trying to perhaps ride those different waves that the miners tend to go through. And yeah, let's see how Aidan and the team do continue now that they're sort of focusing it all more in the UK, keeping they've got the New Zealand shareholders, I believe, still, but operations being focused out of the UK. And yeah, maybe we'll have a research talk in a coffee shop, in an Esquire's coffee shop one day, Alan. Who knows? But
that would be great. That would be really good, because I'm actually sipping a filtered coffee as we speak. So I too am very partial to my coffee, but I think it's you mentioned the cash generation there. I think that's a key part of this business, and it's a cash generator. And if you're investing into any business that's generating cash like this, with overheads that are well understood, an operating structure that's well understood, then okay, it's relatively easy for that company to make money. So as an investor, you can look at the business and say, well, yeah, it's a predictable model. The visibility is good, and of course, when it gets to the stage where the company starts to accelerate the opening process, then I'm sure economies of scale come into play. So the equipment that you're buying, perhaps you're ordering more equipment than you would have done previously. So maybe you get a discount on that equipment. So all of that will feed through to the bottom line and ensure that profitability is improved. And we've of course mentioned the capital growth opportunity. The potential that one of the bigger players could come in, but also I think a company like this, it's conceivable that when it gets to that point, it could start to pay dividends. It could introduce a dividend, because if the company is generating that sort of cash, shareholders might start to sort of ask for dividends, and I think that would be a perfectly reasonable thing to do. And then, of course, it becomes a different proposition altogether. You could get some funds looking at it and all sorts.
Indeed. Well, thank you, Alan. So let's talk now about Corcel PLC.
Corcel PLC. So yeah, we have previously spoken about Corcel, and this is a company that has very much undergone an evolution and a change in its own right. So Corcel is a company with a portfolio of assets. It has of course oil and gas assets, and I'll run through these in a second. It's also got assets in battery metals as well, and the company's undergone a bit of a change over the past year. Scott Kynes, of course, we spoke about Scott beforehand, and I spoke to Scott probably a year or so ago now. He's still in the board or involved with the board as a CFO, but the team have changed at the top. In June, of course, the company raised $500,000 at 0.01p, and that was with certain high net worth investors. And then in July, Scott Gilbert, who you've just interviewed, Mark, was confirmed as chief executive. And with that, Andrew Fairclough came in as the new or as the new interim non-executive chairman. So stability now at the top and good visibility going forward. So the company's assets have changed. Of course, that there was involvement with the reserve power business some time ago. That's now been moved on. But some of the original core assets that were owned by Corcel are still part of the company. It has an interest in the Mambawi license in Eastern Papua New Guinea. It owns 41% of the Mambawi license, which is about 250 square kilometers. And there is a JORC resource estimate on the nickel and cobalt asset there, 162 million tons at 0.09% nickel and a smaller percentage cobalt, which equates to 1.53 million tons of contained nickel. So at some stage that asset will, I'm sure, be moved forward, but meanwhile it's an asset for the company on the books. But the progress is being made really on the oil and gas front, and here there are three assets focused on Angola, and of course Angola is wholly reliant for its GDP and its cash generation as a company on the oil and gas business. So it's very pro and supportive of oil and gas companies. And here the company owns 90% of an Angolian oil and gas play called Apex, and this company has three licenses. That's KON 11, KON 12, which are brownfield development opportunities, and these incorporate the historical Tobias and Galinda oil fields. And certainly there's a considerable exploration potential there with those two. License KON 16, which is the third license, has significant exploration potential with post and pre-salt prospectivity. There was a well drilled there at the Tuenza prospect in 1960. The estimates to date are that license 11 has 65 million barrels of oil, and in regard to Corcel's ownership, that equates to just under 12 million barrels of oil. License 12 has 19 million barrels of oil. That's 4.28 million barrels of oil to Corcel. License 16, there's thought to be 7 million barrels of oil in core, in the core top at the top of what's referred to as the pre-salt Quovo formation. Corcel here owns 31.5% of the asset, so that will be progressed. There is data and work to be undertaken there, and indeed this week the company announced that it had acquired a gradiometry survey for block KON 16, so that is going to progress further. But the focus in the oil and gas front is most recently, and indeed that was backed by the recent fundraise, was in July. The company signed an agreement with Brazilian company Conterp to source onshore gas fields in Brazil. There are a number of sites, basically Alagoas, Sergipe, Bahia, Rio Grande do Norte, Rio de Janeiro, and Espírito Santo regions. So the two companies will be working together to identify and source these fields, and I'm sure we're going to hear a lot more about that progress in the coming weeks and months. So that's the oil and gas side. The company also has battery metal assets too in Western Australia. The company owns the Mount Weld Rare Earths project, which is sited less than a mile west-northwest of the Lynas Rare Earths project at Mount Weld. And this is close to Laverton, Western Australia, pretty much out in the middle of nowhere, but then a lot of that region is, to be fair. Now, Lynas are ASX listed. The project that Corcel owns is 171 hectares, and there are 4 targets there for drilling. Corcel owns 80%, and this will reduce to 30% post-farming. Now, given the existing Mount Weld rare earths mine owned by Lynas currently has an estimate of just under 19 million tons of total rare earth oxide at 8.3%, or which equates to 1.5 million tons of contained rare earth oxides. It is conceivable that with these drill targets, if these drill targets turn up some strong results, then that farming partner could well be Lynas, seeing as it's adjacent to, and logistically, of course, that would be the most sensible option. But that will obviously progress, and we'll have more news on that in the coming months. The final asset in the portfolio is the cane grass lithium asset. Corcel owns 100% of the cane grass lithium asset, which is adjacent to the Eldora Resources project, which is the Waimandu pegmatite project in Western Australia. And again, that we'll have more news on that, I'm certain, as we go forward. But the primary focus in terms of action and activity at present is the oil and gas asset, and that's of course the both that block CON16 in Angola, and of course the new agreement with Conter to develop onshore oil and gas fields in Brazil. So yeah, the company trading wise, the share price hasn't really done a great deal over the summer months. Currently trading at 0.12p. Bearing in mind the money was raised at 0.1p, so a bit of progress since the fundraise. But the company has a market capitalization of just 2.8 million. So there's plenty of scope for upside there. Any news or development, both in terms of the oil and gas asset at CON16 in Angola, or of course Brazil, I think will act as a trigger for the share price. But yes, good potential at this point.
Excellent, thank you, Alan. And of course, yeah, I did speak to Scott Gilbert the other day, early this week actually, and he set out almost as you have done, really, those sort of three pillars of the business, with the focus very much being on the oil and gas in the first instance, and with Brazil wanting to get into small-scale production and effectively positive cash flow to alleviate cash burn on the company, whilst they're pursuing then the more, let's say, speculative or blue sky oil potential in Angola, and then looking what they're going to do with the legacy battery metals project. So it seems like the new CEO has got in earlier in the year, sort of got his feet under the desk and is just sort of coming out, laying out his stall, basically laying out his plan. So just to start, really, to see how Scott sort of progresses that. But thank you for giving us your take on it. So if we finish off now with Katoro. Was Katoro Gold? I think the name is changing to just Katoro again. New management coming in there. Bit of perhaps a new focus.
Yeah, I think so, Mark. Katoro. Well, I think it's fair to say the company hasn't exactly covered itself in glory over the past year, but I think with the new board in place now, there's a great opportunity for a reset. Obviously Sean Wade is well known to listeners here as the chief exec at Power Metal Resources, but also he's the non-exec chairman at Katoro Gold. And Patrick Cullen, who I know has worked previously with Arco Resources and Tertiary Minerals. Patrick has been brought in as the interim chief executive, which I think is an excellent appointment, and really has put the company back on the map for me. So Katoro, the shares are currently trading at 0.9p. There's not really been a great deal of activity. The price has fluctuated between 0.06p and 0.17p over the year. But of course, the company has been very much in transition mode. The company's got its legacy assets, of course, and that's the Haneti project in Tanzania, which is, of course, jointly owned. It's 65% owned by Katoro, 35% owned by Power Metal Resources. So I think having Sean in as chairman is excellent, and it oversees both interests there quite nicely. And of course, Haneti is an asset covering some 5,000 square kilometers, centered around Haneti town in Tanzania, and it's an asset that has potential for both nickel and base metals. The company has previously undertaken phase one rotary air blast drilling, and the current funding position will allow the company to undertake a technical review of all exploration data and phase one results. The company also at this point has very much set out its stall in terms of future activities. It's going through a process where it's optimizing capital in order to maximize value going forward. So it's settled fees to former directors and to Kibo Energy. It's streamlining its overheads going forward in order that it can develop the assets or the legacy assets or offload as need be, and then also focus on the new investment, which I'm coming to in just a second. So the other there are two other legacy assets, of course, the Blyvor asset where investment has now ceased, the Inveru Gold project, and this is a historical legacy asset. The company is owed €792,000 from Lake Victoria Gold following a joint venture agreement in 2022. That payment hasn't been made, so the company is currently considering its options in regard to legal action to recover those monies. And obviously, if those monies are recovered, it'll make a material difference to the valuation of the company and also the options that it has going forward. So September the 9th, so 4 or 5 days ago, the company announced a complete change in direction, a move into Canada, where it has agreed to stake an interest in the White Pine uranium project in Ontario through a subsidiary company, Katoro Canada, that has been set up. And of course, this is in line with a lot of activities from other companies in that region. Of course, First Class Metals very active. Also, Power Metal has interests over there as well. Of course, Fulcrum Metals and other companies that we have spoken about. But the White Pine or the White Pine uranium project is sited in the Kenora district in Ontario. It covers a huge area, some 800 or some 8,000, just over 8,000 hectares. It's also located close to the Trans-Canada Highway in Ontario, and of course, that's always a crucial consideration in terms of if the asset is mineable, if you can get it out of the ground, how do you get it to market? So you're close to the highway, so road the road links there are very good. So the company has agreed with its limited assets in place to spend £5,000 to initiate a limited ground reconnaissance program, and also to undertake further desktop-based assessments to further look at the data that's already in there. Now, previous work has identified highly anomalous uranium in lake sediments gathered across the area, and previous geophysical airborne surveys have the signatures there have indicated the presence of radioactive minerals, i.e. uranium, and also lake sediments extracted are the highest reading that's been secured from those sediments is 142 parts per million, and that's one of the highest readings in the district. So the company does seem to have secured itself a good opportunity here with the White Pine uranium project. Just been announced, of course, so in terms of structure, in terms of next steps, those all to come. But I think with bringing Patrick Cullen, who's a very experienced geologist and exploration geologist too, and Patrick said with us, in parallel with the work done in refinancing and stabilizing the business, White Pine represents a notable first step for the company at what is very much an opportune time in a world-class jurisdiction. Of course, we're seeing uranium prices rocket. We've spoken about other uranium companies recently, Mark. So I think there's going to be some great opportunities to progress this asset pretty rapidly in the coming months, and I'm sure we're going to hear a lot more from Patrick and Katoro in the run-up to Christmas.
Yeah, I'm sure we're going to hear a lot more. I completely agree. The interview with Patrick that Stockbox did just this week, he's quite passionate and quite excited about what's going on with that uranium project there. Very pleased to have staked it. So I think there's definitely more to come in terms of actually sort of properly setting up their stall, what they're going to do with the sort of strategy of the company going forward, and those obviously the assets that are still in the company. But with the new focus as well. So again, it's a bit like Well, almost like all three companies we've spoken about today. It's a good little sort of introduction into these three companies, sort of setting out their stall, and let's see how they progress through Q4. See if they keep us enticed on what they're doing. But thank you, Alan, as always, for your time, and do wish you a pleasant weekend. And we'll speak again next week.
A pleasure, Mark. Have a great weekend, and look forward to speaking next week.
If you enjoyed this interview, then give us a thumbs up, a like or a retweet. Subscribe to us on YouTube or follow us on Twitter and hit that notification bell to be the first to know when we release new content. There's loads of great content on our website too, across all our programs at stopboxmedia.com. Thank you for watching.